Yep, can. So that's it. The rest not coming, right?
Some are not here, not all are here.
So let's see who's not here.
Brenda, Solo, Dr. Julius, Anissa. Jeanette laptop hang. Typing is not here. Tracy, I think not here.
Are we expecting anyone else? Marcus, are we expecting Tracy?
Yeah, she's on the way back.
Are we expecting Brenda?
I messaged her, but reply.
Okay.
Ryan drive this car to school.
Okay, those that are here, group chat got one link. Click on that link and start doing first.
That's why it's showing something.
Everyone click on that link and start doing first. Anybody type anything yet? I don't see anything.
Typing.
Okay. Process. Can type. Okay. One word also can. If you got more descriptive also can. Okay. Everybody must type at least one, but I'm sure you have more than one. So the question is about doing mortgage lah. So when you have a mortgage prospect in front of you, what's your biggest concern? What stops you from being effective in doing mortgage? Okay. We got process, we got rates, technicalities, technical. Increasing rates in current climate. Process. Some more. Just try and give three. I just want to have a straw poll of the whole. Okay, we got at least what, 10 of you should be able to give me at least 15, 20. Come, just type. No need to restrict yourself. Repeat doesn't matter. I just want to have an idea. Come. Can I have a few more, please? That's it? Okay, I'm going to, I can't see your face. Okay, okay, I can't see your face. Wait. Chat. Can only type once per device, really. Wait, give me a second. Okay, never mind. Okay, now I can see your faces. Can I ask by show of hands, okay? Who are the ones who said process? Process is your biggest problem. Process, raise your hand, please. So Esther is process. Who else is process? Ashley is process. 2. Okay, the other will be technicalities. Technical know-how, unsure of technicalities. Who is technicalities? Okay, Tiffany, Darren, and Terrace. Then unsure if we can, our rates are the best. Who? So Tiffany, Marcus. So Jeanette and Fiza, what is your concern? Unmute and talk.
Sorry. I think I kind of missed. Sorry.
You don't have. You
I
didn't
think
have.
more of the interest in the current climate and also the technicalities. I missed on that. Sorry.
Jeanette, which one is your concern? I don't know whether you
Oh,
raised.
my one is like when client got more than one property, then when it comes like the TDSR thing, I'm not very sure already.
Okay, can. So let's do this lah. So we mortgage is important part of our practice. Okay, so and I think many of you all see that how mortgage can give you a good chance to onboard a client. We have toyed with many different models. Should we make all become mortgage broker? So the thing is, to reach that level of competence, right? It takes, you have to do a lot of loans. Okay, so unlike just learning theory, because we have tried, right? So I've taught some theory, Terry has taught some theory. We have created some videos on some technicalities of mortgage. Okay, so but without being able to practice the mortgage, right? Whatever you are taught, you will tend to forget, or maybe you don't know how to apply. Can I have a straw poll? Is that true or not? Because we're just trying to find the best idea. Okay, my initial theory was everybody equipped enough to have a mortgage conversation so that we can we onboard the client. Second way is nobody talk. We will just get one person who is good at mortgage. And then whenever there's a mortgage deal, right, just bring the guy along, join fieldwork. So I want this to be a discussion first because I want to get a feel. We have tried this before. We have tried over the last 2 years. Some of you do more mortgages than the others. Some of you are brand new. Can I have a bit of sharing? What do you think is possible? Do you really think you can be trained enough to be sufficiently confident to onboard a client for mortgage? Can share? Some of you have done mortgages
thinking,
before.
from like the mortgages, right? So if let's say we bring someone down who is confident in mortgage, and then subsequently, then when they need more documents from the banker, then it's another touch point. So I don't know, maybe from client the point of view, a bit hassle. Yeah, I mean, if it's just like a new purchase of one property, it's very straightforward. But recently now, I am, the one I told you, my client got commercial, got residential. So the mortgage broker need to ask more things. So if let's say, for example, let's say I bring Terry's down, then we have a conversation. Then after that, the mortgage broker need to call him to ask for more information. Then it's like, need to speak to so many people just to get one like mortgage done. Then he might as well go back to his own banker that he always been using.
Okay. Okay, so there's some feedback. What about Marcus? From a banker point of view, how do you think our group being so diverse, how should we do this from your opinion?
So normally, like, I think the bank, most of them come to me, they already have a need lah. I think that the difference here would be that you need to actively open your mouth and say that you do this lah. So maybe just to answer Jeanette's question, I feel that, let's say if as a rep you are already very skilled in mortgage, you know what questions to ask, what kind of documents are needed for different purchases, right? Then you wouldn't need to go through that many hoops because you can actually be the one telling the customer what they need and what they need to provide, and then you just hand it over to the banker. So like all the cases I've done here so far for mortgage, right? The bankers never call them at all, only to sign the LO and everything from the start to end, right? There's no need for the banker to call the customer at all.
Yeah, so I think that the difficulty is because I am not very well versed in mortgage yet. So that's why it becomes, should I do this because I'm not very good in it? Then it becomes like a hassle for my client. But we also want to gain some experience so that we can be better in mortgage.
So the thing is, majority of the mortgages out there shouldn't be complex, majority. But there will be a chance where there will be times when you come to this kind of situation where they have multiple properties and it takes a little bit more But I mean, if we go on 80-20 rule, I mean, my job is to equip you enough to be able to have that conversation so that we can bring the client to the next level. That's my intention. Now, sometimes I think to myself whether it's even possible Darius, what's your opinion on this?
Yeah, so I mean, I guess firstly it's just the practice in it. I mean, I have done several mortgage cases, and based on my experience, all are complex. The cases that I have handled are complex. I have not done a lot of mortgage recently, but the core foundation and the notes that I did for every single case is still very ingrained in me. If today a simple mortgage case comes to me, I'm still able to do it with ease. So yeah, I mean, technicalities is one thing, understanding the process is another thing. But I think we must have maybe enough activities to do the mortgage, I feel. Yeah.
Of course, you got enough prospects, then you can practice
Yeah.
Yeah, it's a bit of a chicken and egg I guess. Because if there's not many, then can't practice. So therefore, everything you learn is also a theory Okay, so I want to share that things like process, the process of doing a mortgage, right? I think it's something which we can put down into an SOP, into a video, for which is not necessary for you to memorize. Not necessary, because if you ultimately do enough, you will know. But if you never do enough, you refer before you do, you can do. Because this process is pretty standardized. And I mean, I was talking to Owen and maybe working together with the FinMortgage people, right? To put together an SOP such that it becomes standardized, you see. It shouldn't have so much variability in terms of what kind of documents to ask. Okay, so that one put aside first. Process is, if you have problems with process, is a good thing. That means your client actually want to apply. The next one is the technicalities. Okay, so technicalities, right? I don't think it's so much the technicalities. I don't think you are expected to, on the spot, help client calculate TDSR, or help them with technical things like, how should they decouple their property to some ABS and all that. So again, that one is subsequent step, you see. I think I want to bring us back to basics, right? What is the basic conversation skills, maybe even some scripts, even some algorithms on how you should be carrying on a conversation with a client to even open a potential need. I think that potentially is where you all could be stuck at. Yes or no? That means I'm trying to find the lowest hanging fruit, the lowest hanging problem for which I can address first. So what is it? Is it because when you see a client, you don't even know how to open your mouth to perhaps lead the conversation towards a potential, hey, you got mortgage loan or not? That kind of thing. Or is it beyond that? Are you all okay with initiating the conversation, but then you get jammed because you scared he asks 2 more questions, you are stuck? Is it A or B? Darren, Tiffany, Esther, tell me, where is the problem?
I don't think I have an issue with like opening the conversation, but I think when it comes to actually doing the mortgage itself, then I will foresee a problem lah.
What is doing the mortgage?
Like the application part.
Okay, you
So-
see, doing the application part, right, is not time sensitive, ma. Because after that you say, oh, you're interested to do, okay. Later I go back, I will send you that kind of thing. It's not time sensitive anymore, right? So you don't think you have a problem with initiating conversation to see whether got need, no need lah. Darren?
For me, I think it's like what you say. Maybe ask a few questions, then very easy to throw off because there's no much experience, and I think I can only hold a very superficial kind of conversation. Because there's no
Then
much
what happens after that? So does that restrict you from daring to have a conversation in the first place lah? That's what I'm asking.
restrict. Not to a certain point lah. To a certain extent, it will lah.
Okay, so what I'm trying to get at is that if 100% of doctors that fall in our labs, right, we want to have that conversation because the assumption is majority of them have a mortgage.
Sorry?
Okay, majority of them have a mortgage. So therefore, if you ask,
You are not
there's a
sure
good
what
chance. There's a good chance that the doctor will answer 1 or 4 things lah. Okay, which I've gone before. The 4 things could be, I do not have a property, right? I do not have a property. Second could be, I have a property, but the loan is within lock-in. Third is, I have a property, the loan is out of lock-in. And fourth is, I have a property paid up already. Agree? So the thing is, can you even bring the client to this point? Because once you can bring the client to this point and he gives you one of these 4 answers, I have an answer, follow-on questions to all of these 4 answers. And you can therefore have a meaningful conversation that can lead them to either, okay, let's apply for loan refinancing now. Or, okay, let's apply for your loan affordability because you are looking to buy. Oh, okay, you have a loan that's under lock-in. Let me ask you for this information so that I monitor for you when it expires. Or, oh, okay, you have a paid up property. Do you know that I can give up money for you with low interest rate to maximize opportunity? Something like that. Okay, so if we can get you to this stage, then theoretically, like if you follow this algorithm, you should be able to come to one of the 4 outcomes that will allow you to further the conversation a bit more lah. Okay. Okay, so today I just want to share that this ongoing Mortgage Monday, right? So actually we have Terrace has a curriculum of all these things that we want to teach on mortgage. The problem is, if we were to teach it as an academic way, right, it will be useless lah to you because you will not retain 80% of it. The other way is to attend one of these 2-day courses on mortgage. I think some of you have attended. I think majority who has attended. Fiza, you attended, right? The mortgage one.
The one with
Yeah, the Sing mortgage one. You
yes.
attended, right? So how useful do you think it is, and how many % of the knowledge you think you kept? I just want to ask a straw poll from you.
I think it is useful, but you've got to practice it, right? You have to apply it basically.
So how many % of the knowledge do you think you have retained?
How
Roughly,
many percent? Half.
Half. Well, half is very good already. Half is very good, really, really, really.
I need to refer back to the book again. Sorry.
Okay. But I don't think you feel that confident doing mortgage now, right?
No.
Okay. So okay. So moving forward, mortgage Mondays, which is alternate Mondays, right? I hope to run the session with half of it dealing with a particular concept or a problem, and the other half dealing with a case study. So that even though you don't have a client to practice on, you at least maybe see a case study where you potentially know how to ask questions. Okay, I'm open to suggestions on how to do this better, because I'm still not convinced which is the best way to equip you guys. Can we make this a bit more participative? Can, right? Steady? Okay. Okay. So the thing that I want to deal with today is this issue of interest rate. Okay, who was the one that say, unsure we can beat the best interest rate? Who was it again? Who is not sure, who has no confidence that we can beat the best interest rate? Show of hands. No need to be shy. I mean, it's something that everyone believes.
So what I meant was that, so I had my client, Dr. Leonard, he
Yeah.
applied with HSBC first.
Yeah.
And then I gave him a rate that was what I checked on the Excel.
Yep.
So I mean, I cross-checked with Owen also. And then at the point of time, it was the best rate that we
Okay.
could. But
Okay.
Dr. Leonard came back with a better rate.
From where?
From
where?
HSBC also.
Okay.
So what we did at we just matched only. That's it.
Okay.
So I felt that if it could have been better, if from the onset, right, we give them the best rate rather than them coming to cross-check with us.
Yeah.
To see if that's the best.
So did he give you the deal in the end?
Yeah, he did.
Okay. Okay.
But it's not a good example, right? Because he already bought products with me.
Sure. Okay, that's one. Who else? Who else not sure our rates are best or not? The Excel sheet, don't believe. No need to be shy. I mean, just say lah. I mean, there's at least 3 people here say don't believe in the rates, ma. Hello, don't make me
I don't say I don't believe in the rates, but I've got one prospect that actually asked me for the rates, and I also refer to the sheet as well. But then I know that she was quiet, and I actually got back to her, and she said to me that, oh, I actually took up with another bank because your rates are not really great as how I get from the bank directly.
Okay.
Yeah.
Can. Anyone else? Was there anyone else who feel that our rates may not be the best? Please be honest. Okay. So let me tell you this thing about rates. The first thing that clients always ask when you say you're doing mortgage loans is that they'll ask you, what is the best rate now? Correct? Very, very common question, right? So what's the best rate now? So if you have done mortgage a while, you will know that this kind of question, right? It is actually a nonsense question, right? Because the question has so many different permutations. And because it has so many different permutations, I will use that to answer. Rather than say, oh, the best rate now is 2.75 fixed for 2 years. Will I say that? Then the client may go, hey, no, but I want floating. Do you have floating? Then you check. Oh, floating is 0.75 plus SORA. Is that a correct answer? Also may not be. Why? Because fixed rate itself, 1 year fixed, 2 year fixed, 3 year fixed, also all different. Floating rate itself, again, 2 year fixed, 3 year fixed, 4 year fixed, sometimes it's different. Different loan size is different. 500,000 loan, 1 million loan, 3 million loan, the rate's also different. Agree, right? I mean, depending on your current relationship with the bank, let's say Citibank, your normal Citi, Citi Gold, Citi Private, the rates are all different. Your loan is building under construction versus completed, also different. So I've done this before, and you all should know, sorry, in any loan package, interest rate is affected by so many different factors. So when someone asks you, it's like in Australia, they ask you, let's say you're in Australia now, they ask you, what is the weather now? This is nonsense question, what? Because if you ask me what's the weather in Melbourne now, Melbourne's so big, right? Different part of the Melbourne also can have different weather. Or what's the weather yesterday? Melbourne one day can have 4 seasons, right? So you know what I mean? When people ask you a question like this to show your authority, rather than scramble to look at the Excel sheet to give an answer, how do you choose the answer? How do you choose the best? Do you choose the lowest rate? Let's say you choose 0.55 plus 3 months SIBOR. Oh, best rate now is 0.55 plus 3 months SIBOR. Let's say you say, then the client say, oh, okay, not bad, not bad. Because my banker told me 0.75. Oh, okay. Tiffany, I'm interested, process. Then you process, but you realize his loan only 300,000. Sorry, don't qualify for 0.55. Because he qualifies for 0.75 plus 3 months SORA, you see. But because you were in such a hurry to give that rate, you inevitably have created an expectation that you couldn't meet. So what I'm trying to say is, when someone asks me, hey, Eugene, what's the best rate now? I'll say that, wow, that's an impossible question to answer. Besides the fact that so many things affects the interest rate. And why do I say that? Because once I give him the so many things that affects interest rate, he will then tell me what are his parameters. I say that, for example, loan size alone, 500,000, 1 million, 1.5 million, 2 million, 3 million, all different rate. Let's say Darren is my client. So Darren, so your loan is how much? How big? Rather than be stressed to answer an impossible to answer question with the risk of setting bad expectation, you use that to ask back. So ask already, then he said, oh, my loan 1.5 million. So this loan 1.5 million, is it a new purchase or is it a refinance? Is that, actually it's refinance. Oh, refinance. So you stay how long already? This 1.5 million should be a private condo, easy. Right now I get private versus HDB, because private and HDB also got 2 different kind of rates. Okay, so what I'm trying to get at is, right, I will then, so Owen, Terrace, your bear this in mind. One of the things that you must have in your mind, interest rate affected by these 10 factors. Through conversation, right, I'm indirectly, because you ask me what's the best interest rate now, I ask you back. But not ask you to fact find, right? I'm asking you, it seems like I'm trying to qualify, I'm trying to give you the answer, best interest rate. But first I have to check, So your 1.5 million loan should be private, right? Not HDB, right? He say private. Good. Private. So this one is not new purchase, right? It's existing. Oh, existing. Good. Then I also ask things like, so this existing loan, right, is with which bank? So when you do joint field work with me, right, I always almost casually asking questions. But why am I asking? I'm asking actually very deliberately. Why do I ask which bank? Let's say on my hand now, the best rate is Maybank. But I never go and ask the client what's the existing bank. After I talk long and short, right, they say, hey, the best rate now is Maybank. Then Darren say, hey, my current bank is Maybank. Then you are stuck. You're stuck because if Maybank doesn't give that new rate to a refinance loan, then you are stuck. You again would have created an expectation that you cannot meet. But through that conversation, I will say, oh, so your loan is currently which bank? Oh, currently with Maybank. Then I already know, oh, current Maybank loan. So unless Maybank is by far absolute the best, I will not say that the best rate now is Maybank. Then I will ask, hey, your loan, how many years already? Then Darren start to get a bit suspicious. Hey, why you ask me questions? Oh, why? Because majority of the loans out there, although the lock-in can be 1 year, 2 years, but the clawback period is 3 years. Have you heard of clawback period? Then Darren say, what is clawback period? Okay. When you did your loan that time, did you get some things like legal subsidy, valuation subsidy? Sometimes it may jog their mind a bit, sometimes it may not, but it shows that you are competent. You're not asking because you're trying to dig. You are saying that if your loan happens to be within 3 years, 2 years, but within 3 years, right, there's a possibility of clawback. See, now that I'm getting more information, how long his loan has been with that bank. then I may ask, so actually your this loan, right? Is it fixed or floating? What's your current interest rate? So instead of you telling him what's your interest rate, you ask back. So actually, do you know what is your interest rate now? Usually not sure. Then do you know whether your loan is currently under lock-in or not? Because then you say, why do you need to ask so much, Eugene? Oh, actually, because if your loan is still within lock-in, right, you may not be able to refinance at all, even though interest rates are going up now, because you'll be subject to penalties, blah, blah, blah. And they say, oh, actually, I'm not very sure. Then I say, never mind. When did you get this loan? Then he will come back, roughly. Oh, it's about 3 years ago. Then I know already. The loan is up for grabs. So you see, all this information I'm getting, right? I'm asking back questions from his simple question to me. Hey, actually, what's the best interest rate now? But because I already framed my start of the conversation, this is an impossible question to ask because interest rates there are probably 100 different rates out there based on these 10 factors. So let me try to narrow down what's the best interest rate for you. And, and along the way, as I ask, right? Okay, never mind. Because now I'm dealing with the interest rate question, but at the same time you are doing this, right? Know that majority of clients out there do not use loan brokers. So while you are having this interest rate conversation, you must have the conversation on why you should use a loan broker, okay? These two things are interest rate question, and whenever there's an opportunity, we use why you should use a mortgage broker, because a lot of them still don't know that using a mortgage broker is free, you do all the work for them, and they can still get the best rates. Okay, so let's go back to the the interest rate question again. We ask about private or HDB. We ask about whether it's lock-in or not. We ask about what is his current interest rate. We ask about what is his current bank. Sometimes when you're having this conversation, they will actually go into their app maybe to check for you. Okay, so this in a way, right, is to kind of buy you time a bit to try and understand what is the situation, and to get them more engaged in this whole process, and also to feel like, wow, you're actually quite legit. And it all started because when the question first came to you, you frame the answer first. This answer, we have access to so many banks, okay? And therefore, to find out which is the best, we need to ask you these questions. So after you've gone through that 5 to 10 things that you asked already, right? Then I will qualify myself even further. So actually, we have some of the rates here, but do you know, I'm sure unless you're living under a rock, you know that interest rates are rising aggressively. Agree? Then clients say agree. Yes, you see, like just last week, the US Fed say that rates are going to continue rising. Scary, right? Scary. So what am I trying to do? This is my second frame. My second frame is whatever rate I give you now is irrelevant because it's not going to be the rate you'll finally sign. It's like, huh? Really? Yeah. In fact, rates nowadays, sometimes within 1 week, they become obsolete. So I'm framing already that whatever I give you now is going to be obsolete. High chance it's going to be obsolete. So, but this is an indicative rate I give you now. As we get closer to you finalizing, we will find you the best rate. That's my second frame. Okay. First frame is there's no such thing as what's the best interest rate kind of answer. Second is rates are so volatile that whatever I give you now, it is highly, or is likely not going to be the correct rate because it takes time for us to apply the loan and all that. If you're looking for a house, for example, to buy, then even more is irrelevant because by the time you buy, it may be weeks to months down the road. Third thing, third frame I'm going to say is, you know, Darren, I told you we are a mortgage broker, right? We work with all the 16 banks. So like, unlike last time, I can say because I'm a banker, right? Unlike last time, I only have one bank. My rate is good, it's no good, it's no good. But now we deal with all the banks. So we are very confident that we can get the best rates most of the time. Why do I say most of the time? That's my third frame now. In the small minority of clients, where if they may have a relationship with the bank that is out of normal. Like for example, Darren, if you had $10 million with a bank, I'm sure the bank will do whatever it takes to give you the best rates. But these are rates that are not standard. These are rates that are highly deviated. Okay, but we are confident that most of the time, regardless of your relationship, at best, most of the time, you can only match what we offer. Okay, I say that with confidence, but I never say all the time. I say most of the time, because I'm trying to caveat that, but there will be situations where we will not win. So why do I want to frame that? So that in the event like Marcus's client come back to us and say that, oh, actually, I asked HSBC and they got a better rate for me. But I already caveat that I am a good broker, I have good rates, and most of the time, at best, you can match mine. But sometimes I lose due to whatever reason. So why do I do this? Is because, and the truth I want to tell you guys is that when it comes to rates, right, this best rates in the market, right, is impossible. No broker out there, I won't say most brokers out there cannot give you the best rates all the time. Okay, why? Okay, those bankers will know. We all have a rack rate, a shelf rate. So if I tell you today I'm a broker, Darren come to me, oh, my shelf rate is fixed 2.75. Like that, lor. My SORA rate 0.75 plus SORA. That's it. That's what I say. Some of our closer bankers will come to us, like Maybank, like OCBC, as Standard Chartered. They will tell me, oh, but then we have a deviated rate. Deviated rate. That means already one level of deviation already. They know that if you ask, they will give you this deviation rate, subject to certain conditions. But why do we get the deviated rate? Because they know that our loans are mostly large loans, mostly doctors, mostly good credit. That's why they already give to us already. But out of the 16 banks, do we get 16 deviated rates? Of course not. Why? Because deviation comes with relationship between the broker and the banker. Do we maintain good relationships, equal relationship with all 16? Of course not. Those of you who know Maybank last time, Amy, I used to work with Amy. Some of you think that her service not very good and all that. But the truth is that I sent her so many loans that when I say jump, she literally says how high. On a Sunday night, 11 p.m., I ask for valuation, I will get it. Because that is where she will then use her brownie points with her favorite valuers to back them. Sunday night, I got a big client want a valuation, can you give me or not? Why does she do that for me? Because a few things. The first principle, meaning as you all will know, when I work with our bankers, right? I've been banker before. You ask Kai Ping, you ask Marcus, you ask Tracy. The worst thing is you process. In the end, the client don't take up. Ask Richard, right? You can bend over backwards and do all the paperwork. Worse, you go and beg your boss to ask his boss to deviate special rate for you, special considerations. And then your client say don't want. That's the worst thing to do. So my principle with our bankers has always been, I'm very honest with them. When I tell them, when I apply with you, you are the only banker. If I need to apply for more than one bank, I'll tell you. That means I'll tell you. So let's say I'm applying with Marcus and applying with Tracy. I'll tell them, hey, look, this time bo pian. I have to apply too because timing very tight and not sure whether your bank can give everything that we need or not. So we are applying too. They know, they both know, and they both go for it. One of them will get it. So why did Amy always jump when I say how high, when she ask me how high when I say jump? It's because majority of the loans I give her succeed. And it is big loans. The other banker is DBS Renee Commercial Loans. We sent her so many loans until I beat her monthly target by far, until always buy me mooncake and stuff like that. I mean, but that's besides the point. The point is that she's very responsive. But can I have 16 banks, 32 bankers, residential and commercial, all being as responsive to us? Of course not. State Bank of India, I have no relationship there because I don't send loans there. Or Bank of China at that time, for example. Rates are very good, but their processes are damn cocked. I know that I'm afraid if I do it right, instead of 3-day processing, they may take 3-week processing. I will lose the deal anyway. So what I'm trying to tell you is that when it comes to rates deviation, like Marcus's, for example, maybe he went to ask his banker, but we only check from Collab, our platform, and Owen puts into the Excel sheet. Okay, only some of the banks we have deviated rates, some don't. It's like Dr. Julius recently, he did a loan, and it just so happened that the client was a bit more savvy and had access to certain rates that we didn't know we have. But after we went to ask the OCBC banker, Shamin, then she said, can, I can try and fight for deviation. So these are all not a sure thing. Then like how leh? Because if we had access to the best rates, right, then there will be no other competition already, right? Everybody has certain banks and certain bankers for which they maximize the relationship. It's like at one point of time, Maybank, SME, I had very good relationship with them. I met 3 layers of bosses up to the point where they told me, Dr. Eugene, we want to makan the doctor loans. We will do whatever it takes. And because I had management commitment, then I went ahead and I pushed them all the way. But can I push every single bank? We don't have enough of that kind of volume lah. So my straight answer to you is we can never have 100% of best rates. It's impossible. Okay, that one I tell you first. But we manage that by framing to our client first. Okay, most of the time we can get the best. For you, at best, usually our clients can match what we offer. But in the minority instances that we don't get better than you, for those of you who are doing the mortgage campaign, right? We agree to pay, how much was it, Tiffany? $100, right? $50, $100, whatever lah. Lowest rate guarantee, or we all pay you certain money. Why am I willing to do that? It's because it gives, I'm buying intelligence. If I know that this other bank, one of the banks, let's say we don't used to work with, is offering something that we didn't know, then that $50 buys me the intelligence. Okay, case in point, those of you who do mortgage before, you know that new purchases don't have legal and valuation subsidy. Okay, new purchases, only refinance got legal valuation subsidy. And this, I thought, was 100% of banks follow the same rule. Guess what? CIMB decided that they want to be special. They said, because they cannot beat everyone else, right? They said, new purchases, CIMB offer valuation and legal subsidy. We are the only bank out of 16 that does it. Guess what? That was their value proposition. But guess what? At that point of time, we didn't know. So when a client came to me and said, hey, you say no valuation, but my friend says CIMB is offering subsidy. I went, I was so sure, I was so cocksure. I said, no such thing, no such thing. In the end, I went to find out, right? It was true. CIMB has decided to make this their unique selling proposition. But I didn't have to pay $50 to get information, but I would lah. So what I'm trying to say is, in the realm of mortgage, right, you cannot win all. It helps to help us to win majority. Framing is very important. Okay, 3 frames. There are so many questions that I need to ask you before I can get the best rate. Second frame is we will get the best rates most of the time. At best is you can match. What's the third frame? Anybody?
Special condition.
Was that the third frame or second? Okay, yeah. So we say that no, that's the second frame. I'm saying that most of the time we can get the best rates, but sometimes certain of our clients, because of relationship with the banks, they can get better than us. So already caveat already preface it already. Okay, which then comes me to the next one. Because you cannot win all clients, right? This is one way to select your clients. Okay, because if your client gives you a lot of shit, okay, even at a mortgage kind of level, after you frame nicely, you kind of say, walao, you say they're very good, but then you're like that kind of thing. Then you already know that this a client who is going to be potentially difficult and a client who you potentially may not want to serve moving on lah. Imagine if everything you do after that, he'll be second guessing you. Then there's no point, right? Like I have this client, orthopedic surgeon. That time I went to ask him, That time I was in bank. We say, oh, we have private banking services. Then he say, oh, is it? I already got 3 private banks, Credit Suisse, Julius Baer, and Bank of Singapore. And each of them all invite me to all my events. And I'm very clever. I only put minimum amount for all 3 banks. So, Eugene, what do you have to offer me? My answer straight out to him is, oh, actually, we have nothing to offer you. You are already very well served, and we cannot do better. I already decided at that point of time, this is not someone I will, because every time we do something, let's say we propose a product or something, right? You can bet he will be comparing with other people, and chances are he won't give you the business. And doesn't mean these guys are nasty. I had one particular doctor, Richard may know him, ONG doctor, Dr. Lee. Super nice doctor. Now he's the one who is ill. So super nice doctor, but he asks us a lot of things, ask. And I corroborate with another banker. He asked me a lot of things, asked for a lot of information. He asked the other banker also for a lot of things. But in the end, he gives business to someone else. Never give to us, So it's going to be like that. It's going to be like that. Okay, so as long as you frame your client properly with regards to interest rates, okay, and don't be hard up about having to serve every single one. That's the only way you can have a successful mortgage, career lah. Okay, so I think amongst us, I've probably done the most mortgages. Okay, majority of them are not complex. Okay, so all you need to do is to get the client initial questions answered by just now I say framing law. Okay, because if it gets too technical, right, you shouldn't be attempting to answer anyway. But the fear of not being able to answer also should not stop you from having that conversation. So I want you all to be, say like Tiffany, shouldn't stop yourself from having that conversation. If you have to, next session, I'll talk about that 4 question, the question you should ask to get that 4 potential answers. Don't have property, got property loan locked in, got property loan out of locked in, 4th one got property no loan. Once you get to these 4, you should be able to do something with them. Okay, but you must make sure that you don't get stuck in this interest rate conversation. So, okay, so if you are like Fiza's client, the client asked for a rate, right? You asked for a rate, right? Right, Fiza, she asked you for a rate, right? You gave her a rate. But because you didn't have the opportunity to frame your answer, he just think that, oh, that's your rate, law. That's it. And because of that, she found a better rate. Maybe she felt paiseh to go to you and go, hey, Fiza, I found a better one, leh. Can you match or not? Maybe she didn't want to trouble you. Maybe she didn't believe that you have the best rates or whatever lah. She just didn't come back to you. Whereas if you had been able to frame your answer, actually, all these questions I need to answer. Let's say you give you the answers already. They say, okay, currently the rates are this. Oh yeah, okay, the third frame is the volatility of rates. The rates are so volatile, Fiza, you'll tell her that, I'm going to tell you a rate now, but trust me, this rate, after you talk to me next week, right, it will be irrelevant already because it's so volatile. So I want to get to the root of the problem, which is, so why exactly are you asking me? Is it because you got a loan that's out of lock-in already that you want to refinance urgently? Or you're just looking to buy a property or whatever, that kind of thing. Then you'll know the urgency. Because if you know that, actually, I got a loan that's already out of lock-in, my husband's been bugging me, and we are looking, then you know it's urgent. Then you will stay very close to this client. But frame first. Actually, this loan, right, I don't know whether you have information about her loan or not, but if you're just given an interest rate, right, you basically are leaving the potential of business to chance. You don't know whether she'll come back to you or not. Whereas if you have framed it properly, you have a reason to go back to ask her. So we need to be able to negotiate this interest rate question. What is your interest rate now? We must be able to negotiate this conversation, this question, okay? First frame, there are so many questions involved before I can give you the best rate. Second, most of the time we get the best rates. At best, our clients can match. But those that we cannot win, why? Is because sometimes clients have super relationship with bank. Third frame, no matter, in any case, whatever rate I give you now, because the situation is so volatile, highly likely by next week, right, it is irrelevant already. So actually, you're asking now, is it because you are urgently want to refi or blah, 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 that kind of thing. So you frame yourself, these 3 frames already, right? Less likely you'll be caught in a situation. So that when, let's say Marcus's client go and ask HSBC, then he came back, when he got a lower rate, then he may be asking, hey, so why did I get a lower rate? Is it because, I had a whatever lah. Maybe because the rates are so volatile that time Eugene told me last week, right? This week, right? Maybe the rate changed already. So it gives you benefit of the doubt, ma. Then you come back and say, hey, Marcus, actually the HS rate you told me 0.7, actually the banker told me 0.65 leh. Right? But at least you have a chance to, at that point of time, say, see, I told you, right? It's so damn volatile. In fact, yeah, the rates have been changing. A lot of banks just changed rate yesterday. So something like that. Sometimes a bit of bullshit. Sometimes it's real. But basically, you have a chance to rescue the situation. So you don't feel like, oh, yeah, wow, they're whatever lah. But we also must not miss the forest for the trees. Sometimes, the client come back to you with a rate that's lower than yours. And sometimes you actually check where you realize that you cannot beat that rate. It's okay to let the case go. It's okay. Because sometimes if you are too desperate to win the case, you must realize that we are not purely mortgage brokers, right? Mortgage brokers don't close loan, don't earn money. We have opportunity to get their share of wallet subsequently. So therefore, we must always be true to our mantra. Whatever we are doing is to the client's best interest. Okay? I had this client, classmate, 30 years, he actually told me the rate. Hey, Eugene, I got this rate. If you can match it, this loan give to you. $12 million purchase. Big loan, commissions are $10,000. I tried to match it, Standard Chartered. Everything matched sui already, but he has to show cash. He was with DBS, I was Standard Chartered. I was very sure I could win the case because match ready, ma. In the end, he showed cash, right? He need to show shares, which was currently in his private banking account. DBS said, no problem. We just need a letter from Julius Baer say that doctor got 10 million of shares in Julius Baer account. Done. Then I went, hey, can I took the same letter. I told Shamin from SCB, hey, like that. Unfortunately for me, Standard Chartered does not accept shares that is not in their bank. It's currently with Julius Baer, no count, cannot count. As a result, I lost the deal. But by the time I was too late already, because I was pitching against another broker, also a mortgage broker, and he probably knew better law. So he went to chop the DBS rate already. So I couldn't chop the DBS rate because he already made the application. So I went to chop Standard Chartered, the next best one, but I lost lah. So there are instances where you will not win the deal, but it's okay. Does it then prevent the client from still doing insurance and wealth with you? No, does not. Full stop. Come. Questions and reflections, please, on this. Ask the quiet one. Come, Ashley.
I think what you just said is very structured. There's a lot to learn and digest lah, I find. But
You had a mortgage client, right? Or prospect or something, right? Did you?
Yeah, the prospect, but it's only a HDB one. Fell through because her company works with DBS. Then they apparently provided them with special rates. So eventually she didn't take up. I don't know, she just disappeared. Yeah.
Okay. So I guess it's cases like this where we want to use this Mortgage Mondays. We can have it more frequent if possible. But you see, what you just described to me in one sentence, right? A few sentences, right? That case, could we have rescued it? We don't know, ma. So if let's say it's a case study situation, then I may ask a bit more. So actually, what exactly did you say? What was the thing that the company tied up with DBS, that kind of thing? So we can learn from this, your kind of situation, that particular loan, right? It's not a very complex loan, ma. So it's something which can happen to anybody. How can we have some learnings there? Maybe certain things you could have asked. or certain things you have said, certain things you have framed to get her to be your client rather than just disappear. Because when, if not, right, this current case, you in your mind, right, lost law, but actually don't know why she disappeared. So then you wouldn't have benefited from next time if you encounter another client like this. How? Okay, so we are just, you know what I'm trying to impress upon is, I just want to help you all deal with this most basic level, the initial level, to bring the client towards having an interest to want to process the loan. Because processing loan, it's easy. I mean, it's not easy, but it is a process, not very complex one. I mean, the process is pretty standardized. So that's Ashley.
Actually, on that, I thought it was a pretty good point to bring up. Maybe it's not really mortgage related, but because if let's say we acquire the client or we try to acquire a client through mortgage, and then let's say for some reason that we really didn't get the deal, the mortgage deal, right? Then, but ultimately we still want to acquire the client as a client, right, to do other things. But because we fail to acquire the client through the mortgage deal, we didn't get the deal, right? Then wouldn't that affect like wouldn't that affect us trying to acquire the client in other areas?
So it depends. So if the client is just lost, right? That means like Ashley's client, don't know what happened, disappeared. Or Fiza's client actually went with another bank. It is our attitude towards that loss that determines whether we can do more, right? It's like, for example, Fiza's client got a loan. Loan done already, right? Let's say no sound, no picture for 2 weeks. Then, but we know the client had a loan that needed refinancing. So confirm it didn't go with me, maybe go with someone else. Or worse, never do anything, procrastinate. So I think it's our duty to follow up to make sure that we see some closure in the mortgage. So let's say Fiza called and say, oh, actually, Fiza, I didn't want to bother you, but we actually found this bank and I went with this bank and the rate was like that. They say, oh, good for you, lor. I mean, of course, we lost the deal, but I say, hey, it's okay, you know. I'm happy that at least you got this done. Because I was worried that maybe you forgot about it, procrastinate, never do. You know, interest rates are going up. So in a way, okay, some of you maybe think a bit cynical, but yeah, show a bit of concern that at least got it done. Okay, but that's just the first part, So actually, doing the loan is just the first step, You know, for us, right? We have many of our clients, their needs are dealt in a very silo mentality, So that gives me a chance to then talk about the 4 pillars, if you haven't already. You know, loans is just one part, but do you know that I'll say a bit of storytelling? Do you know many of my clients, right? They go and do their loans, right? And that's it, No one else talks about the implication of the loan. But I mean, surely now that you have let's say a 1 million loan, right? Have you ever considered about protecting the loan, for example? Then the conversations to lead towards the protecting the loan thing. You'll be surprised, clients actually think about it and worry about it. I don't know. We always have this misconception, maybe ourselves, that we say then our clients say we go out there, I want to sell me insurance really. You will be surprised, okay? Some of them worry about it, but they don't think you do it. Or they think that maybe the thing is too small to bother you or whatever. I had a client who I think Owen should know. Actually closed the loan with Maybank already. 1 week later, went to ask my Maybanker, Amy, about mortgage insurance. Either too paiseh to ask me, didn't know I did it. He went to ask Amy. Then I took a few more days, then I called the client back. He already bought a mortgage insurance already. He was really concerned because once he signed the LO, only, he knew it was really legally binding. He was so concerned losing sleep that he went to buy insurance. So you do yourself a favor, do your client a favor by using that, you must have some closure on the loan bit. Oh, great, you have done it. So now actually, right, the next logical step, the next important step is to look at the protection of the loan. Because many of my clients, many doctors are like that. They just, or their bankers just do the loan and forget about it. Do you know, if you want to be dramatic a bit, do you know this client had a 10 million loan, actually had no protection and he didn't even know how to go about it, something like that. That kind of natural flow we need to build. But the act of getting closure on the mortgage that you lost allows you to proceed. But before that, you may, for the loan bit, right, you may say, oh, great. So now you sign already. So actually, which bank? Oh, OCBC. Say, hey, why are you asking so much? Visa asked me. Say, actually, you know, the second more important part for a broker is what? Is to monitor the loan for you to tell you when it's time to refinance or reprice, right? But is it true? Only partially lah. You just want to have this intelligence, ma. You want to know that OCBC, you know sign when, you know expire when, so that you can go back to them T minus 6 months, 18-month mark to remind them. You didn't win them now, doesn't mean you cannot win them next time, right? That's the first thing. And then you talk about the mortgage protection. So same with Ashley's client. No sound, no picture. Okay, but the no sound, no picture doesn't stop you from saying, hey, you know, that time we talked about the loan, I want to find out what's happening, because you know interest rates are going up every day. I want to make sure that you did not forget about it, sit on it, procrastinate, that kind of thing. Come from an area of concern lah. Of course, the guy gets fed up enough. Okay, actually, I done it. Same thing that you ask. Okay, great. At least you've got it done. Because I got some of my clients, walao, sit 2 years after expiry, still never refinance, something like that. Always use other people, right? Then so actually, which bank? Oh, actually, expire when? Oh, da. So then they talk about potentially loan protection. Like that lor. Don't let it just go dead. Even though you lost the mortgage business, it's okay. Esther, recently you're managing some loan, right? Some comments about what we shared today. Can hear or not?
Can hear. I think, for me, so far, got no problem to talk about loan. But the process-wise, I think it's taking very long.
Process very long means what?
Like to submit to the bank, the banker, and then, the waiting period is quite long. So I'm not sure if it's the normal way versus, let's say, they directly apply through loan.
It is the normal way. There is no, of course you want to be quick and dirty, just say, oh, okay, I call a banker to call you, done. Can be done. Would you do it? If I give you an option now, I tell you now, actually we're going to do DBS but one option is you just, I give you the banker of the DBS banker, you just allow banker to call client. That'll be the fastest. Would you do that? For speed?
No.
Why?
Because I want to see what they have.
Exactly. So we want to have the information, right? So if it takes a few more days, so what? Does the client know what is the usual time to take to complete a loan? They probably don't know. But if the client is unhappy with you for that 2-3 days delay, right, then it shows that you never frame your value at all. Your value is to that client is just a postman. You add no value one ma. So why should I go through you and then probably let you earn some money, then delay? Why should I? Because you didn't show the value that you as a broker will provide. Right? So again, I will go back to the framing of interest rates. To make it sound as though, right, the process is not so simple. To get the best rates that is suitable for you, it's not so simple. And then I will use the other people's story, right? Do you know, 8 out of 10 of my clients, right, still go direct with the bank. And with this go direct to the bank thing, right, I have a few stories I can tell. See, again, right now I'm telling you all ad hoc, right? Owen, Darius, you help me there. I don't know how I can put it down into scripts or into stories, because these are stories which I tell all the time, right? Okay, but I can tell because the story's in my head, ma. But how do you all tell it? Like, for example, if someone tell me, no lah, I just go to the local banks lah. Local banks are the best lah, right? Very standard, right? I have an easy story to tell them. Whoa. And I will do it in the, whoa, are you sure? I mean, that's the last thing you should do. With that kind of incredulous Chris Chan kind of like, huh? You prefer local bank, why? That kind of thing lah. Then I'll ask them 2 questions. One is, actually, the dollar that DBS lend you versus the $1 that State Bank of India lend you, got different meh? No different, right? So if State Bank of India lend you at 0.5% cheaper, let's say $10 million loan can, $1 million loan can save you 50,000 a year. You don't want. It's like, oh, okay lah. I mean, I don't mind lah. But then save man. State Bank of India leh. Save man. I say, hey bro, listen. People lend you money, no, you put money, no. I will make it very clear to them, almost without saying, oh, why are you so stupid? But essentially trying to say that like you are putting money, people are lending you money. The value of the dollar is Sing dollar, it's not Indian rupee. So if the value is the same, but people charge you less, why don't you take it? They say, hey, but then legit not lah. Why these foreign banks lend so cheap? They say, because they are not DBS, because they are not POSB, because they don't have desperate people, loyal citizens like us that just put money and earn zero interest with POSB DBS. DBS don't have to fight for loans, and therefore their rates are therefore not the best. Correct or not? Versus foreign banks that have to fight. So therefore they give you better rates. That's point number one. Point number two. Do you know that if your money is with DBS and you borrow money from DBS, in the event of whatever reason, you have to default the loan due to bankruptcy, due to whatever, right? Guess what? The money that you have in DBS can immediately be frozen. Versus, you borrow money from State Bank of India, but your own money you deposit in DBS. You see the difference now? The money in DBS is still got one layer of safety there. Therefore, our advice to all our clients is, and this one's simple concept, I'm not going back to simple concept, right? Where possible, always keep where you put your money and where your loans are in different banks. Simple concept, right? We just told them what? Foreign banks are always more hungry, and therefore they give you the best rates, but they still lend you that same Singapore dollar. Second is, where possible, always keep your money separate from your loans. Just based on this alone, they will be more open to non-DBS, OCBC, UOB loan already. But doesn't mean you do not ever take local bank loans. No lah. Sometimes their rate's still good lah. But as far as possible lah, you know what I mean? So that shows value ma. You show already you are an authority in this ma. And you say, actually we are brokers. We work with all 16 banks. So any one point of time, right? You know, it's like even DBS, right? Can they have the best product all the time? Can any bank have the best rate all the time? No, I'm not how they make money. So therefore, they take turns. And that's our value as a broker. We see the dashboard of rates all the time. Whoever is hungriest at the point of time, we will borrow from them because they give us the best rates. Full stop. It's as simple as that. But yeah, it's not so simple. That's why we exist. And we do all this for you. Yeah, it may take 1 or 2 days longer. We do all this for you, give you the very best rates. And guess what? You don't pay a cent more because the bank pays us. Full stop. If you still want to go DBS, then go, nothing to say, right? Full stop. Okay, but that's my pitch. But the truth is, can the client get better if they go direct to a bank? The answer is also yes. Because bank not stupid, ma. Bank get a loan through us. They pay us brokers a fee, right? Sometimes banks direct acquisition, especially local banks, right? They give vouchers to the client. They do. So that's something which we need to be clear of. If he show you, "Walao, Richard, you tell me about I loan with the bank, he give me $500 leh." Then so it depends. At that point of time, I may go, "Wow, is it?" Then I go and check. Or I go, yeah, they often run promotions like this, but no worries. Since you're my good client, this $500 I give you from my commissions. Again, up to how comfortable you are. We have full flexibility to do that. Right? Depending on what is the value of the business you think you can get from the client in the long term. Why is $500? Heck, some of us give 100% commissions to give back because we think the value of the relationship is a lot more. And that's where we have the advantage, you see. If I was a mortgage broker, I 1 cent also I don't want to give. I'm not. I can earn money from many, many different areas. Okay? Who still got question? Esther, your questions are Esther. Esther cannot hear us. Never mind. Yes, Darren got question. Or reflections on what we just shared. Framing. Okay, it's 4 o'clock already. Come, 10 more minutes.
Yeah, there's a lot to digest. But I think we should run a bit more trainings on like how you say get to their the part where we can ask them the 4 questions, the 4 conclusions, then we can move on from there.
So besides interest rate, what else do they ask you? I think that is important to me. See, because you know, like those of you who have gone joint field work with me, right? You know that when the client asks me, I can rattle off the answer. But when they ask you the same question, you may not be able to answer. So I need that list of questions so that I can tell you how I answer.
Is
Like
it
today, I never say again.
Is it important for us to be equipped with like the knowledge on corporate loans? Since
The what on corporate loan? Sorry.
the knowledge on how to deal with corporate loans.
That part, it's I would say we should restrict to people who are already familiar with residential loans. Because you see what the corporate loan guy wants, right, is to know, like, they instead of interest rate, they usually ask, how much can I borrow? Right? That's the standard thing. So I may be able to tell you, oh, corporate loans, right, we can lend up to 90%, 99%, whatever. Can then he may then say, for me, like, at least for me, because they know I'm a banker, right? I will immediately work out for them what they can borrow. Why? Because I know what are the factors, the parameters are. But I also take the opportunity to ask them the numbers. I'll say, actually, for this property, right, we can lend 90%. But actually, it depends on only 2 things. One is your profit before tax, or your profit numbers last year, and second is your NOA. Then I'll take out paper straight away. No. So actually, last year, your profit, how much? Straight away, I'll ask already. Then you say, not sure, about 400, 500,000. Then I write down. Then your NOA, how much? Because based on that, right, I can already calculate. I know how to calculate loan affordability to give them a ballpark. Because once they have that ballpark, right, I tell you, they feel really, really relieved. It's like you tell a person going for LASIK, you say, oh, your success rate is 98%. I tell you, they are literally saying, take my money. I want to schedule for surgery. But corporate loan comes with a bit more technicalities. So definitely not something that I want the rest of them to do. I mean, Richard has done before, if he remembers. Marcus, Tracy, you all should be able to, if you all want, I can equip you all with the information. If not, then take it back and we group chat and talk to doctor after that. Because to deal with it at the start is not so easy.
Okay.
As it is now for residential loans, if they ask beyond interest rates, if they say, oh, so actually I want to do this, but their concern is not so much interest rate. The concern is, I want to buy another property, but currently I got another 2 in my name. How that kind of thing. Then you're talking about decoupling, decoupling and selling and that kind of thing. So a little bit more complex. Those are where you need to bring the situation back to me. And then I walk you through that case study because it's difficult to teach. I can teach, but it's something which you may not encounter frequently enough, and therefore it doesn't make sense to you. It's like right now I got one client that is going to buy a property, wanting to buy for a long time already, but husband and wife in the same property in the same name. So what they do is they needed to decouple, wife take over the loan, husband buy new property. But wife got no income, so have to show cash, but got no cash to show. So waited for one of the mother passed away, had an inherited property sold, money coming. So it became a lot more complex. The whole plan was I think a 9-month plan that we had to work out just so that they can buy that dream home that they want to buy, something like that. Yeah, but it's very fulfilling. Imagine you do this for a client, right? Imagine the debt of gratitude they owe you because no one else is going to do for them. And that is where you have a client. And this client, after doing all this, right, because now they've freed up 2+ million of inheritance money, they are finally ready to act on the plan that I prepared for them last March. 5 IR. In the end, they decided to do 0 because they felt they needed to buy their house first. Now the house is close to completion, already, waiting to complete. Once they complete, they know they will have 1 million free and they need to use that 1 million for retirement planning. It takes a lot of patience. It's complex, but fulfilling. Last questions. Richard, anything? Okay.
So I think it's a very good refresher conversation.
Yeah.
The only thing I want to raise is that when I go into the folder to look at the banker list, my question is always, is this updated?
Owen, some more besides that question?
And I think it's also the rates lah, because there were a few occasions where I bounced it back with Owen that hey, the rate that I saw there is not the rate that, for example, Maybank gives, etc. So that gives you that lack of confidence to pitch your case over.
Okay, Owen, you answer. I open the door first.
You mean the banker list in the mortgage sheet, is it?
Yeah.
So those are taken from Collab itself,
okay.
and I understand that some of them actually are like it's not updated to the point where some of them have already left the bank.
Okay.
They are no longer doing. So that one I will need to inform like Collab itself lah, because the fact is that I don't know any of the banker ma, and they are the ones that Collab is the one that go to all the banks and onboard the list of bankers from each of the bank that wants to participate in this Collab thing. So yeah, then I will need to inform like them lah that say, hey, actually need to update lah because.
So sharing from experience, like for example, if we go via the Collab route, we need to have the letter of offer, right? In order to claim commission.
Yes.
I'm not sure if the rest of us knows about this requirement.
Yeah, so correct. So that thing, so this Collab thing, again, to clarify with the rest of you, how come got this Collab? It's because we all started with Collab. Collab is a platform with all the rates and all the banks, right? Whenever we close a deal through Collab, Collab is a subsidiary of Red Brick. Okay, so we are assuming that Collab and Red Brick rates are the same, same system, same engine. Last time, 100% of our banks were through Collab. Every time you do a loan through Collab, Collab keeps 10% of your commission. 90% goes to us. But over time, because of certain banks we did a lot of business with, we signed direct. Maybank Residential, Maybank Commercial, DBS Commercial, for example, we signed direct. We get 100% of comms. Okay, the Collab process, their staff is also very lean. So their process is a bit strange. Like DBS, for example, recently we tried to claim, we cannot claim under our own name. We need to claim under Collab, under Colin, and then tell Colin by uploading the LO and blah, blah, blah. So the process is a bit semi-manual, unfortunately. So, but having said that, I think, Owen, we need to fine-tune the SOP. Basically, our guys here need to know that which bank they're closing with, they need to do what. If
actually,
HSBC need to get LO, need to upload this, that kind of thing.
Okay, actually, the process is already there. When I'm not sure if you all know, when you do a loan already, and then you want commission, right? Then there's a form. Who don't know that there's a form to fill up to tell me that you have done a loan. There's a form to fill. There's a Google form to fill. Who don't know? Okay, Esther don't know, never mind.
Actually don't know. Yeah.
Caesar also don't know.
Owen, I think even before we go to that stage, the issue about knowing which banker we can go and deal directly and which banker is still under via the Collab route. Like for example, I call DBS and I mention our name, but the banker said, no, we don't have such arrangement. Oh, then we realize that it's via the Collab way. So can this information be downloaded somewhere so that when we call, we know at the back of our mind what and who these are these banker that we're working with? Like for example, Maybank, residential, and now the commercial as well, HLF, commercial. Who else are the bankers that we have dealing directly with versus via the Collab? so that we don't encounter this issue. You know where I'm
Okay.
coming from?
So
Okay,
we
I know
always
where you're
we
coming
always deal direct with bankers. We always deal direct with bankers. It's the claims process that some is through collab. But so what Owen is saying now is the claims process, right, can be transparent to you guys. As long as you go to that Google form, fill in the details of the loan you did, upload the LO, Owen will do the rest and you get your money.
Yeah, Lord, it's the uploading of the LO that is an issue. If we don't know that we need the LO, or the collab bankers don't give us the LO.
Must ask law. As a guide, I think as a standard, all must ask for LO.
I asked, but they say you have to ask directly from the client
Okay.
because
Yeah.
it's like PDPA lah.
Yeah. So either I so some of our bankers send to us directly. Some bankers send to us, send to client, copy us. Some will ask us to ask from client, especially those that we don't have relationship with. So we have to deal with this. I mean, Owen, this is a process which the volume is going to start to go up, right?
Yes.
We have to institute that process by maybe keeping to the bankers that know us. That kind of thing. That means you work out with the banker. We tell the banker, look, whenever our guys do loans, right, you must give us LO. Unless it's like Standard Chartered, they say, sorry, policies cannot. They need to email us, email client, copy us. Then that's fine. We need to standardize that process. If not, you see, Richard will have one experience. Then maybe Fiza will found another DBS banker that doesn't know us. They say, no, sorry, we cannot give you. So we need to control the banker list. If there are new bankers that are onboarded, we need to kind of like get them on board our process. It happens because like sometimes there are certain bankers, right, go and directly contact our client. Then I will fly off, I'll really go and I'll be damn pissed off. I say, you're not supposed to contact our client. Some of them don't know, Worse, some of them, they get their priority RM to go and contact client and stuff like that. So, so we need to manage our banker relationship. That's important. So Owen, that one, you have to help me to juggle and fine tune it together with Solo .
Okay. Yeah.
So to end it off, I think today's sharing, right? I think we need to institutionalize it a bit. Maybe that 3 frames. Again, you see, this topic we decided between me, Terrace, and Owen, we decided to talk about the interest rate thing, but I didn't prepare for it. But you see, when we do, then it comes out law. But if I don't institutionalize this 3 frames thing, then then it's gone. So maybe we discuss together with the fee mortgage people how to create these assets so that next time when someone asks you, hey, interest rate, what's the best one? You should be doing this already, the 3 things. Then I work on a few more assets to get us towards the asking, so you have home loan or not, to get that 4 answer. Maybe the next Mortgage Monday, we can talk about the 4 outcomes, something like that. We'll try to come up with the curriculum, but I'd rather it not to be a structured curriculum. I'd rather it be y'all got what problems, tell me. We deal with it. At the same time, I will pick case studies for y'all to share so they become more real. Ken? Steady? Any last words?
I will put the list of bankers. I'll list down which are the banks that we work with direct and which are the banks that that we go through collab on the summary sheet of the mortgage rates Excel.
I think that Excel sheet needs a walkthrough. Maybe if you can, right, tomorrow during the team meeting, can we walk through that sheet to tell everybody, because some people may not even know there's more than one worksheet.
Okay.
They just see the first sheet.
Okay.
And so we use tomorrow's team meeting to also walk through this.
Can.
Okay.
Can I ask the last question, elephant in the room? When do we get paid for the commission from the mortgage loan?
When bank pays us.
And
so the process is this: you inform Owen what loans you did, then the payment will come in monitored by the virtual assistant or our admin people. Once the payment come in, Owen will then prepare the payment voucher. Once a month, I will go and pay. But yes, sometimes I forget that he next me. But it is administrative. But sometimes faster, sometimes slower. I also don't know. I don't know how long it takes to come in. Owen should know better.
Okay.
But we undertake to pay as soon as possible because really sometimes there was one like backlog 3 months, 3-4 months. But not my fault. It was just, I just do as I'm told. I asked to pay, I pay. Correct or Owen? Most of the time, I try. I forget, sometimes I forget. I don't want to withhold your money for no reason, really.
Okay. The next question again is being a devil advocate. Is there any way to review the percentage that we are giving back to FinCorp or FinInvest? It's currently now 70-30, right?
We can make it 80-20 law.
80-20 or whatever. Because
No,
frankly,
it's 70-30 now, but we can make it 80-20 if you
Yeah.
want.
from my own journey,
No, I mean, we
usually-
can make it 60-40 or
Yeah.
50-50 lah.
I use the opportunity to also open up new leads via the same client by telling them there are something that I'll rebate back to them in terms of saving, and in so doing, get some other deals.
Actually, that one can discuss. I'm even willing to rebate. That means share the rebate. So that kind of helps you, right?
Okay.
Rather than change that, because you see, changing the fee sharing, right, is a matter of competence and a matter of how much you use the company resource sitting over there, OWEN, right? So he will tell you that none of the 30% or whatever that we keep in the company is withdrawn by me. Not a single cent, because I need to keep afloat in the company to pay the various people that maintain the company. But if let's say you say this client, we really need to give 100% of the comms back because of the potential business, right? Then you can give, but client will expect the 100%, so then we will both give, company and you will give the 100%. But of course, try not to do that too often. So can discuss.
Okay.
Okay, you have used up your 2 questions. Okay, I gotta go. Terrace, Owen, and then we all go and pull Solomon to try to wrap up some actionables from here, Ken? Okay. Thanks, everyone.
And thank you. Bye-bye.
Thank you. Bye-bye.
Bye.